The Foreign Secretary seems a little frustrated with Brexit. Are you?
I think, we've been relatively sheltered in the asset management business because we already had operations in Luxembourg. I think it's we're just getting on with it and forming a MiFID subsidiary in Dublin, and as he said, just getting on with it.
OK. You talk about your asset management business. One of the assets that you hold, Martin, is Standard Chartered. In fact, you're one of the biggest shareholders in Standard Chartered. There is talk this morning that we could see mergers in European banking, Asian banking, Standard Chartered and Barclays. As you walk the halls of the event you're at the moment, is there a sense that the European financial services industry needs to make some significant changes if it's going to compete on a global stage?
Yeah, I mean, I suppose looking at it from the asset management sector before we discuss the banking sector, certainly there has been a movement out to the middle ground. You either want to be small or big, hence the merger between Aberdeen and Standard Life and Janus Henderson. So whether that applies to banking is interesting. I've just been on a panel with the chairmen of BBVA, BNP, and Santander. And yes, I think that there is a feeling that the sector needs to be larger, certainly against the very large U.S. banks that dominate investment banking globally now, and look as if they're going to continue to do so.
As a holder of Standard Chartered, and I'm just kind of using this as an example, would you support? You're a big asset manager. You have skin in the game here. Would you support such a move?
I've just heard the rumours as you have. I suppose I'd be slightly surprised after they've sold that Barclays had sold off their African operations, mainly for capital reasons. So we need to understand much more if indeed there was even any substance to these rumours before we would give an opinion on or be supportive of it. Look, we think Bill Winters is doing a good job at Stanchart. We think Jez Staley's doing a good job at Barclays. I think they both have a bit of work to do just to get their own return on equities up. Now, whether a merger helps that or not is something that we'd obviously like to hear if they were even, as I said, even if there was any substance to these remarks, to these rumours.
Martin, one of the things that is fact is that US regulations, US financial regulation is being rolled back. How does Europe compete? How do European financials compete in a world where it's becoming easier if you are a US institution? And you've also got the tailwind of a stronger economy and a deeper capital market.
Yeah, it's going to be tough. I look at it again through the eyes of the asset management sector, and I look at the different regulations. So, for instance, for example, in the U.S., asset managers can be very capital light. They don't need to carry huge amounts of capital. In Europe, we're subject to CRD4 regulation, and I'm not saying CRD4 is bad. In fact, I'm an advocate of CRD4 capital adequacy rules. But what it does mean is our competitors don't have that same level of capital that needs to be carried, putting us at a disadvantage to U.S. companies, and of course that applies in banking. And hence the reason probably that U.S. companies are dominating investment banking globally.
Martin, you've decided to focus on Sky in terms of the boards that you sit on at the moment, in the short term at least at the expense of Glencore. What outcome are you looking for at Sky?
You know, I'm there representing the independent shareholders, the 61% of the shares that are owned by other institutions apart from Fox. You know, I think we just want to see that the shareholders do well out of it. You know, whoever, whether it's Comcast or Fox, I'm reasonably, I have to be reasonably ambivalent as to which of those two come forward with a bid that's recommendable. And, you know, as I say, I will try with my fellow independent directors to do what's best for those 61% of the shares not owned by Fox.
Just a final quick question. You say all is not lost when it comes to Lloyds and its relationship with Aberdeen, with Standard Life Aberdeen. What exactly do you mean by that, and where are we?
Yeah, I mean, look, I've taken the view the assets are going, rightly or wrongly. You know, whether we were in material competition with Lloyds Bank Group, you know, but as I say, look, we're still in discussions. You know, I think it's always difficult when friends fall out, and Lloyds have been a great long-term supporter of the legacy Aberdeen business, and we're very supportive of our merger with Standard Life. So hopefully we can sort out a solution. But as I say, look, you know, we'll just have to see where that takes us.
Martin, as ever, thank you very much indeed for taking so much time to answer all of our questions. You're involved in some interesting things right now. It's a great pleasure. Martin Gilbert, the co-CEO of Standard Life Aberdeen.